very good morning. You're watching India Market Open. It's a good-looking world this morning, and our markets, I'd like to take, we should take credit for that the markets actually did okay. So India led the way up in trade yesterday.
So you took credit?
No, not me. I said the Nifty should. When I say ours, I mean our country.
Yeah. I mean, well, it's been going good. India, low beta market, all of that working out well. But let's see. Who knows? I mean, we mentioned yesterday, right, that the possibility of this being in the accumulation period, who knows how long it lasts. But yeah, I mean, it's good that India is actually shining so brightly.
So today is the day to make enough money to buy the new iPhone 16 Pro Max, which was launched yesterday.
Or make enough money to watch Trump debate Kamala Harris.
As in you can watch that for free on YouTube.
And you can watch it for free.
Okay, no.
Data charges.
Okay, I mean, please, that I think people can manage. But no, I was also referring to the new lineup that Apple released last night. iPhone 16, the Pro Max, starting at $1,200 is the most expensive one. So yeah, it's that season of the year again. They've also launched Apple Intelligence, so their own version of AI. So get ready to sign those checkbooks. At least both of you. You guys are the Apple guys, not me really. But anyway, global cues look good, and that really is the big headline. I think one word, if I had to use to describe what we've been seeing across the world in all asset classes, is rebound. So that's what you have seen in the US markets as well. The Dow was up nearly 500 points after a very, very tough September so far. In fact, the best rally in September so far. Nasdaq also up about 1.5%. The usual suspects are the ones which have been gaining, the ones that were hammered the most. So you had an Nvidia up 3.5%. All your tech back was up in the green overnight. So what becomes important now is the two sets of data that we will see on Wednesday and Thursday. That's the CPI and the PPI, the Consumer Price Index and the Producers Price Index data. So you want to see what inflation looks like, and of course that will set the rest of the week in terms of a direction for US markets ahead of the big Fed meet just about in a week or 10 days from now. In terms of bond yields, not much movement because of the kind of expectations that are now being set in and priced in. So 3.7 on the 10-year. Crude also saw a bit of a pullback. Remember, a lot of concerns about demand coming in on crude, but a bit of rebound over there. At least the Brent was back at $72 levels, and we'll have to wait and see what happens with the OPEC Plus output increase, which is penciled in. It was postponed, might now come in December. Asian markets have opened strong, and that's definitely a good cue. Let's look at how Asian markets are faring at this point. And yeah, mixed over there, but at least Nikkei is still in the green. Implied open, we should quickly look at the Indian implied open because a lot of global cues will flow into how we perform today. At least we're opening up in the green, and we didn't have a very bad close yesterday either, so that's important. I'll just quickly pull up fund flows before we get to the setup of the day and how we fared yesterday. You had buys on both sides, foreign investors buying a little under 1,200 crores and domestic investors also about 1,700 crores in buys. So the setup is good and a lot of news coming in. GST has not really delivered on what was expected. Yesterday was the GST Council meet, Niraj, but I suppose there are still some segments which will react to those news stories.
Yeah, and we'll talk about those as well. Just one small global other piece of news flow, and this is big also because it's just the start, but the US House passing the biosecure bill targeting some China biotech firms. I think that's a big one because we were talking about it all of last week and the kind of benefits that some of the Indian firms could get or the other global firms could get. The first of the moves has happened, so could be very, very interesting. Now, just before I get to trade setup, Samina, yesterday was
a quick recap.
Banks.
Yeah.
But not
it
the
was
small caps.
banks. Unfortunately, banks always come to the rescue of the markets when the situation gets tricky. So it was a good trade. It was banks and consumer durables that helped the index end in positive territory. But just to very quickly take you through the day, we started out gap down. We started out closer to levels of 24,821. But in the very first hour of trade itself, the market started seeing some recovery. By midday trade, we were trading flat, and the last hour of trade is when the banking picked up and the Nifty buying picked up, and the Nifty managed to close shy of 25,000, but at 24,936. So the index recovered nearly 200 points from its day's low point to to end higher. Bulls, of course, comforted because the Nifty has closed at the day's high point. What also helped us yesterday afternoon was the fact that European markets had opened up higher on anticipation of a rate cut from the ECB. That sort of fueled the last leg of rally on the Nifty. Consumer durables and banks, like I said, led the way up. Nifty FMCG rose 2% to close out at record highs. Stocks like HUL gained 3% on their ice cream business news. Counters like ITC also and Godrej Consumers not doing too badly in yesterday's trade. Banks gained over 1%. The gains in the Nifty 50 were led by ICICI Bank and HDFC Bank. These are the counters that fell the most on Friday, and hence the recovery on these counters came in yesterday's trade. Nifty PSC, though, continues to show signs of weakness. It was another weak day for them yesterday. Friday, they lost 3%. Yesterday, they declined 2%. And they're down about 10% from their highs on the 2nd of April this year. Bajaj Housing Finance fully subscribed on day one. No surprises there. In fact, subscribed over 2 times in the very first day of subscription opening. So all in all, I think it was a good day of trade. Consolidation with a positive bias. Like we had indicated to our viewers, it wasn't about defense, it was about defensive stocks. And HUL, ITC, GCPL, I think the whole lot gained. But I think I'm sigh of relief because Bank Nifty also, recovered fairly well.
Yeah, banks are leading the charge. I mean, it becomes almost difficult to say what banks would do, but very quickly banks led the charge. Just that it becomes really, really difficult to call the extent of the upside, especially when it comes to banks, because they're being sold at higher levels. However, brokerages are saying that go out and buy, and I'll quickly mention what Jefferies is saying. But the important thing to watch out for in today's session might be that do the SMID stocks follow the large caps higher? Very likely that the mid caps and the small caps could have a bit of a rub off of the green as well. So that is to be watched out for. The interesting thing, though, guys, is that autos seem to be firmly out of favor. Independent of what happened yesterday to autos, the fact that car companies are giving discounts and the advertising or the marketing statement, of course, is that we are participating in the festive season, some of the companies, but effectively, it has never happened that in the festive season, auto companies give discounts. The fact that they have had to give discounts in order to shore up sales shows that autos are, at least the passenger vehicle companies, are a bit of a slow lane. So that one pocket maybe to watch out for. And just on banks, very quickly, yesterday Nuvama came out with a note saying that rate cut fears are overhyped, but things could do well. Jefferies today is saying the same thing. They're overweight. They're saying this is the turnaround time for bank stocks, and the potential softening of broader banking regulation could turn around fortunes. The rate cut impact will be more than offset by easier liquidity and easier banking regulations, hopefully.
But where is the bias? Private sector banks?
Private
or PSU
sector.
banks?
Their top picks. So they're doing a mix. The top picks are ICICI Bank, Axis, and SBI, for Jefferies at least. And they say that HDFC Bank could also benefit. But yeah, essentially sticking to the larger banks. In the PSUs, only SBI makes the cut for most brokerages. Yesterday Nuvama, today Jefferies, yesterday Nomura. So people are turning at the margin on banks. Let's see if this lasts.
I think the bias has started with private sector banks for a while now. It's only a matter of time that shows up in terms of returns. And ICICI Bank relatively hasn't done too badly. It's been HDFC that's been on the sell side for quite some time now. With regard to SBI, remember we saw that big sell-off in terms of Friday's trade on back of Goldman report on the counter. Yesterday, what you saw is the selling was abated, but the stock was unable to actually, do a significant recovery from that big fall on Friday. So keep this on your radar because it's only a matter of few days that the stock will, chart its territory back up. But in terms of stocks, there are a whole bunch of stocks that you want to track this morning. There were some very big decisions that came out of the GST Council meet, which will impact specific sectors. We'll, of course, talk about that in a little more detail. But just before we go into that, the other few stocks that I'm tracking this morning, IRB Infra, watch out for this one. It usually reacts quite well to its revenue toll numbers. Year on year, the toll numbers have improved significantly, up 20% in the month of August. In fact, they've reported a number of 503 crores versus 417 crores that was seen last month. So year on year, there's a significant improvement. Month on month, also there's an improvement. And management pretty confident that the festive season will only lead to an improvement in toll numbers. So IRB Infra is one stock you should be watching on your radar today. If the market broader sentiment remains positive, stocks like these will see an up move in trade. Well, the other one that I want to highlight, and it's been a very strong run for Zaggle Prepaid. This has created significant wealth for investors. The stock is up 121% in around a year's time. What worked for Zaggle again is 4 days ago they announced a deal with Blue Star. This morning, they reported to the exchanges that they've entered an agreement with HDFC Ergo General Insurance Company, where Zaggle will provide HDFC Ergo with the Zaggle Propel Reward platform, which is, they've also, of course, will be, it's a channel reward and recognition system for employees of HDFC Ergo. We don't have a sense of how big this deal is or what the revenue contribution will be or the timelines of the deal. The management will be talking to us, so we'll get better perspective on that. But it was only 4 days ago that the stock, like I said, signed a deal with Blue Star. This was one of the 4 big deal signs that they've done in the last couple of weeks. Even in terms of reporting earnings, Zaggle's growth has been phenomenal. They reported a 700% jump in profits in the first quarter of FY25. So it's been a winner, to say the least, in the last couple of months. The other one, or the other space that I quickly want to highlight is tire companies. We've been talking about tire quite a bit in the last few days because they seem to react directly to the way crude prices move. Remember, crude is an integral input for synthetic tire companies. And on back of lower crude prices, some of these counters stand to see an improvement in margins. But what we hear this morning is from next week, tire companies will undertake a price hike in the range of 2.5% to 3%. What we also know that rubber prices have been fairly volatile, and that too impacts the margins for these tire companies on the downside. Now we will talk to CEAT at 9:30 a.m. to understand whether the price hike would be enough to negate the rubber prices and whether or not they stand to gain incrementally from lower crude prices. So Apollo Tyres, JK, Balkrishna, CEAT are some of the tire counters to track in today's day of trade.
Okay, a few more that you need to watch out for. Dixon Tech is one of them. That's first on my list, and in fact, we're going to be speaking with the company in just a few minutes, about 10 minutes from now, so stay tuned for that. Under the PLI 2.0 scheme, their wholly owned subsidiary Paget has inked an MOU with HP India. It's for manufacturing notebooks, desktops, and all-in-one PCs. It's, of course, something that will be a positive for the stock. It's already run up about 3% yesterday. So keep an eye on Dixon. I mean, valuations could be a whole different question, but otherwise, this is, like I keep saying, this is the poster child of the Make in India for technology or hardware kind of PLI scheme kind of company. Hero Moto is the other one. Ather Energy, which is an associate company of Hero Moto, has filed its DRHP. They're going to come out with an IP of 3,100 crores. Now, details are still awaited on what exactly is the valuation, etc. But remember, Hero does have 37% owned of the company, so that will be an upside for Hero in that sense, sentimentally. Vodafone Idea is the third one that I found interesting. A few days ago, we talked about how Goldman Sachs had set a 2.5 rupees target price for Vodafone. You have a Citi note now, which has a target price of 22 rupees on Vodafone. In fact, it's an upside of 65%, and quite a few reasons that they have given on this. One of them is that they say the completion of the fundraise has closed the gap with peers on 4G coverage and 5G rollout. They say there's a discernible shift by the market leader, that is Jio, towards monetization that augurs well for the whole pack. And importantly, they think that the peak of intensive competition is behind the whole sector. Moves by Bharti and Jio to monetize 5G are also being seen as a positive. Of course, the developments in the AGR case are key to monitor. But I just found this interesting because this is a stock on which nobody can make up their mind. A lot of retail investors do have participation when it comes to Vodafone, and you have the likes of a Goldman Sachs saying 2.5 rupees, you have the likes of a Citi saying 22 rupees. So anyway, which you look at it, Vodafone might see a bit of an upside today, thanks to
just talking about Vodafone, I don't know if you both noticed, and I know Goldman has a buy side and a sell side, and they also have an iBanking arm, but in the recent fundraising, from what I remember, I think Goldman had participated in one of the significant investment that was
Not
made.
sure.
And of course, on the day when they put out that target, there was a little bit of a debate of why is the iBanking side going and allocating funds to Goldman while the sell side is calling it. But there is, of course.
But the interesting piece is cities removed the upside catalyst watch now because they're saying that catalyst watch has expired.
Yeah.
So therefore we are kind of interesting. Let's see what happens on Vodafone. The rumor on the street is that there is also some buying that's happening from the promoter entities. So it could be interesting to see what happens to Vodafone.
That's the big one everyone's been waiting for.
So it could be interesting. Okay, 3 stocks on my list very quickly. Life insurance names. And we won't talk too much about the GST rates here, but GST rates as of now unchanged. Could that be construed a negative because so much was anticipated there? But more a definitive takeaway is the fact that the industry's individual APE growth, which is what annualized premium equivalent growth, which is what life insurance companies are measured with, that growth moderated to 10% for the month of August versus 18 to 19% in the previous 3 months. So the moderation of nearly 900 basis points is not a good number. From individual names perspective, ICICI Pru's individual APE growth was about 29%, which remained faster than the industry, and HDFC Life's growth about 10% and SBI Life's growth of about 4% moderated in the month of August. By the way, LIC was just 1%. So you might probably see some of the insurance stocks getting a bit of a stick. LIC, SBI Life in particular. iPru may just do well, but maybe the GST overhang any which way is weighs down on these stocks. So watch out for this one. GMR Airports is the other one on my list. Will acquire about 10% stake in Delhi International Airport. Further 10% stake in Delhi International Airport from Fraport AG for 126 million. The company's stake will now increase to 74% versus 64% earlier. Apparently, based on the last rounds done, this purchase comes in at a fraction of the cost of the valuation, and therefore this could be construed as a big positive for GMR Airports. So if the stock reacts, you should know why it's reacting. And I thought Ahluwalia contracts was interesting. 2 contracts worth 1307 crores from Signature Global for housing projects. Maybe Ahluwalia contracts reacts a bit in the session today as well. So those are the top 3 on my list.
Just going to quickly add order wins because that seems to be the talking point this morning. 3 that we have, of course, we'll highlight all of them for you. Just before I go into Hindustan, let's start with Hindustan Aeronautics. They've signed an MOD for 26,000 crore rupees with HAL. MOD has signed, Ministry of Defence has signed a contract with HAL for 26,000 crore rupees. The contract is for 240 AL-31FP Aero engines. Remember, the order book of HAL currently stands at 94,000 crore rupees as of end of FY24. They expect the order book position of around 1,20,000 crores in FY25, and about 47,000 crore rupees of orders are expected to be completed in 1 year time frame. Just before we talk about another one, just a quick mention in Premier Energies. I don't know if you mentioned it. The stock was a big gainer. It's had a phenomenal listing. Yesterday as well, it went home with a significant rally of nearly 11%. And we believe they've got a big order to the tune of 215 crores from the Uttar Pradesh Agriculture Department. Order for 8,000 solar water pumping systems, and the execution of the project is by March 2025. So it's a huge order with not a very delayed or extended timeline. So again, maybe another bump up on Premier Energies this morning. So
you're talking about MOD. I would add Action Construction also to that list. So keep that on your radar. It's got an order for 99 forklifts. So it's, I suppose you're coming into that season when a lot of state and central government as well are beginning to sanction all of those orders. You typically have that lag after a general election, and that's going to be one big mover. For a whole
yesterday we had ONGC, today we have Ministry of Defence.
So this is that period after a bit of a cool off when a new company comes, when you start spending all the money that you have budgeted for, I suppose.
Yeah, and so maybe these order wins, insurance, and we shouldn't forget Pharma. Biosecure Act, the the Laurus's, Syngenes of the world could well have a field day today.
Could that explain the pharma rally we saw across a whole bunch of counters
But only
yesterday?
the CDMO companies. Actually, the Ciplas don't benefit out of it. Only the
Ciplas didn't go up
CDMO
yesterday
CROs.
either, if you remember. Right? It was the smaller ones that saw the activity.
Which have done well.
So the good thing is that there is a lot of positive news flow sector and stock-wise. I don't know how much from the GST Council meet though, because the expectations on that were a bit higher. So let's just tell you what happened. The outcome of the GST Council meeting came in late last evening. There were a number of cuts in GST rates on various products, some increases, but the much anticipated cut in GST on health insurance and life insurance was not announced. There's a group of ministers which has now been tasked with the job of mulling over it, and they have to give their decision by the end of October. Finance Minister Nirmala Sitharaman has said that this issue will be looked at further down the line. Listen in.
2 new GOMs have been decided. One is on the medical and health insurance. It will be the rate rationalization GOM headed by the Deputy Chief Minister of Bihar, but with newer members added for this limited purpose. The rate rationalization GOM under the Deputy Chief Minister of Bihar will be doing its job, but under his leadership, with newer members who have volunteered for the limited purpose of medical health insurance related GST. We have told them that they will look into this matter and come with a report by end of October, just 1.5 months' time. And the GST Council, which will meet in November, will finalize based on this report, which will come from the GOM.
Okay, so that's the bit which saw no GST impact. So health insurance will have to wait, not your snacks, because that's one of the categories which have seen GST cut down. Mahima has got the compilation ready of what kind of stock action we can see today. Yes, Mahima?
All right, Tamanna. So I'll start with the cancer drugs. Now, rate for cancer drugs has been reduced from 12% to 5%, and some stocks that could benefit from this change include Abbott India, Zydus Life Sciences, Alchem Laboratories, Cipla, Biocon, and AstraZeneca Pharma. Next, as you rightly mentioned, the rate for excluded and expanded savory snacks will be reduced from 18% to 12%. Now, some stocks that could benefit from this include Pratap Snacks, Gopal Snacks, and Bikaji Foods as well. Next, GST on car seats will increase from 18% to 28%. Now, the likely movers for this could possibly include Bharat seats. Next is that introduction of reverse charge mechanism on metal scrap has been introduced. Reverse charge mechanism basically means that if a scrap is being sold from an unregistered buyer to a registered buyer, the GST will be paid by the registered buyer and not the unregistered buyer. Now, this may possibly impact stocks like metal scrap recyclers who buy metal scrap. This includes Gravita India or Pondy Oxides and chemicals, and steel companies that rely on metal scraps for their raw materials, which includes Tata Steel and GSW Steel. So these are some of the stocks that could potentially see some impact on the back of this GST changes.
Okay, thank you so much for that, Mahima. So that's the story on GST impact. But the other big story this morning is Dixon Technologies, and Atul Lal, MD, is joining us now on the phone line. Mr. Lal, a very good morning to you, and great to hear about the MOU with HP under the PLI 2.0. Please do add more details on why this is significant, what kind of a revenue contribution it would have, and what else can you tell us about it?
So HP's brand, it's an elite position as far as the market share is concerned. And for Dixon, IT products domain is going to be the next trigger of growth, wherein we are setting up a new campus in Chennai. In the first phase, the investment is going to be 250 crores. We're going to employ around 1,500 people. The capacity is going to be 2 million notebooks. We're going to add to it PCs and all-in-ones and data servers. So for us, it's a very big agreement. We're targeting to start production sometime in Q4 of the current financial. So for us, it's a big agreement. The exact numbers are being worked out, what volumes and all. We are committed to make this a success under IIT PLI 2 of the Government of India.
Some of the notes say that this is the third largest client for you and the ambitions are big. Do these ambitions start showing on the numbers starting FY26 itself? Is that the plan?
So we already have top 4 largest of global brands in our customer portfolio. HP is a big one. And we are targeting to achieve almost 3 to 3,500 crores in 25-26 itself. And over a period of 6 years, what we've committed in ITPLI 2 to the government is 48,000 crores of revenue. So as I was sharing, it's going to be a large product category for us.
Mm-hmm. Okay. Mr. Lal, so the agreement, I mean, the numbers, of course, I mean, this helps you in the numbers per se for FY26, as you said, the number that you mentioned. What happens with such big clients? I mean, now that you've gotten into, let's say, this one for HP for this, it's not technically just a foot in the door, you've actually barged into the door. Do you expand that further immediately? How does this typically work? What's been the past experience with other clients? And therefore, could that be the template for HP as well?
So in EMS industry, we are subservient to our principles. Always the focus is to create value for our customers. This is our first large relationship with HP. We are committed to create value for them. And once we do that, we're very confident that the relationship is going to deepen and expand. This is what has happened with our other large global brands, which are our customers. Over a period of time, their share of wallet with Dixon has expanded. So we are committed to HP. We're really thankful to them for giving us this very major opportunity. And we're going to be creating value for them. And then we're going to get back to them for expanding our business.
Hi, Atul. It's also Samina joining in. Good morning. Just a quick one. Acer and Lenovo are also significant clients for Dixon. What is the revenue that both of these contribute to your top line?
So IT products is, we have already been doing with Acer for almost a couple of years now. Lenovo production is going to start shortly. As I shared with you a bit earlier, that we're targeting almost 3,500 crores of revenue in our IT product category in the forthcoming financial, that's 25-26. It's going to take a year or so, year and a half to ramp it up. So the major jump I feel is going to come from 26-27.
So, Mr. Lal, out of the 3,500 crores that you're targeting from this segment, how much would come in from HP? Just try to gauge the size of this compared to what is already in the works.
It's slightly early. The numbers are being worked out. MOU has been signed. Definitive agreement is being worked upon. We presented the agreement, the MOU, and signed the MOU in front of the Honorable Minister. So those numbers are being worked out, and we're going to come back to you on that shortly.
By when? Is that also something that is in the works, the timeline, and by when we would see all of this accruing?
So we have committed to HP that we're going to start production sometime in Q4 of the current financial. Exact volumes, capacity allocation, numbers, models, all those details are in works.
And in Q1 FY26, you're looking at 2 more brands on board, if I'm not mistaken. Is that right?
So with HP, we already have 3 brands in our customer portfolio.
Right.
Another 4th brand is almost confirmed. We should be signing up with them shortly. So we have 4 of the largest global brands as our customers in this particular product category now.
Looking forward to hearing about that as well. Thank you so much for speaking with us this morning. Atul Lal, MD of Dixon Technologies, is talking about.
Thank you so much.
Yeah, fantastic. Just talking about the MOU that they've signed with HP, and that's the big one. That's 3 major brands already in the bag. That's HP, Lenovo, and Acer. And 4th one will be announced very soon. The details of the size of that deal and how many products or how many pieces they will do, etc., contribution to revenue still have to be worked out. But they will see production start by Q4. which is what is important as well. So Dixon is one of the big stories this morning, definitely. And the other piece, I think, Niraj, is insurance companies, because they had all of their updates out yesterday. And you have notes out as well. And I'm wondering if it'll be a bit of a negative, because you didn't have the GST cut that was expected, but on the other side, their updates for the month were not too bad. Yeah,
so not too bad for ICICI Pru. In general, for everybody else, it seems to be a bit of a bummer. Maybe for even Bajaj, it's been okay. But for, say for those two, LIC, a measly 1% growth. The other two, which is HDFC Life as well as SBI Life. SBI Life, just a 4% number. So I think the numbers, you're right, save for the two other names, not looking all that great. And plus the insurance GST, no mention overhang. Yeah. I wonder if insurance gets a bit of a stick today.
I mean, I know that the group of ministers will, tackle it down the line, but I'm just wondering, it's so easy relatively to cut GST on snacks and namkeen, but not on health insurance. It's just an interesting thought. I mean,
from a consumer perspective, it's so good to have GST on health insurance cut down.
I mean, in terms of priorities of what people actually need, is you'd rather need, cheaper insurance than cheaper snacks. Anyhow, let's talk about, what you should be snacking on in terms of your derivative plan for the day. And Samina is joining us with the FNO update.
Yes, it's going to be a decent start, even though implied Nifty is indicating to a small gap down in early minutes of trade. Remember, the handover or the trade across Asia is rather muted, even though there was a strong handover from Wall Street. Now, let's take you through what is important in terms of the FNO picture. Where are we seeing the activity on the calls and put side? 25,000 strike member has a maximum call OI. But before we go into that, that is the picture. Nifty 50 futures are trading in a premium, but there's a small decline of about 4% in open interest, indicating that the upside on the long side for the Nifty could potentially be capped after we saw a little bit of a bump up in trade yesterday. So you will see a little bit of a gain, but it doesn't seem like that goes very high. In terms of Mag Nifty, the picture is very similar. This is very different from what we saw in setup yesterday. Bank Nifty futures trade in a premium, but there's been a sharp decline in OI to the tune of over 6%. And this indicates that, again, traders are not too convinced to take aggressive long positions, and you could see some unwinding taking place at these levels. Well, that's the open interest distribution, and what we know for a fact is 25,000. That's the maximum call and put open interest that we are seeing. The reason really being on 25,000, there you go, is the fact that market participants don't expect the Nifty to rally too much from these levels. So this acts pretty much as a stiff level of resistance on the Nifty. On the support side, 24,500 is where we've seen maximum put open interest, which really means the trading range for the Nifty is 24,500 in terms of a support and 25,000 on the upside, which will act as a key level of resistance. We also observed heavy call writing at levels of 25,500, acting as a pretty important level of resistance. On the put side, of course, put writing was seen at levels of 24,800. So that really is the spread. You're going to be expecting a day of trade where the markets will be range bound. 25,000 is probably where the maximum action remains, and it also seems like on the downside, the first stop really is 24,800, which was respected in trade yesterday. That, of course, if it gets taken out on the downside, 24,500 becomes an important level of support. What I want to also quickly highlight is the Nifty's max point stands at 25,000 strike, which means that option sellers are likely to experience the least loss at expiry on option trades around the strike price of 25,000. That's what we have on the calls and puts open interest distribution. In terms of stocks, a whole bunch of stocks saw short built up. There were a couple that saw long built up. So counters like India Mart, MGL saw trades on the long side. Granules, of course, had a pretty bad day of trade yesterday. There were shorts being built on this one. PFC in the second half of trade, and Aarti Industries as well. Well, you had short coverings visible in stocks like Godrej Consumers, Page Industries, ITC and Dr. Lal PathLabs. Remember, the day yesterday belonged to the FMCG sector, so traders, of course, covering the shorts, anticipating further upside in some of these consumption names. Well, that's what we have in terms of trade. The PCR has also improved. The Wix actually did spike up in trade. Yes, saw some activity in trade yesterday as well. Well, we have with us Amit Goel now, who joins in with his trades. Amit, hi. It was a very resilient market yesterday. We ended at the day's high point. After a gap down start, the Nifty consistently towards the second half of trade saw an interest on the long side. What is the view on the Nifty? I do believe that 25,000 is where we are seeing, quite a bit of activity, to be fair. Do you feel it's going to be range bound from here? Do you feel that there is room on the upside? How would you trade the Nifty?
Hi, good morning, Samina, and thank you for having me again. Good morning to all your viewers. Yes, I do believe that there is some more room left on the upside, provided the 25,000 call on writing gets a little unwound. What happened yesterday, as I see from a technical chart perspective, is that Nifty has taken support at the Fibonacci retracement of 62%, which is a crucial level known as the golden ratio. From there, the market has rebounded. Right. This is the low that we had created in the early part of August on account of yen carry trade unwind. So from there, we are trying to take support and moving up. I do believe that structurally the market continues to remain bullish, and I would like to play on the long side itself and try and play for a bullish sort of a view, provided the 25,000 level calls start seeing some sort of unwinding. If that does not happen, I would like to stay away from the Nifty trade and wait for that to unwind. I do have a trade on Bank Nifty. If allow me, I can then share that with you.
I'm intrigued you have a trade on Bank Nifty because, of course, yesterday it seemed like that was almost going to be a given because we'd seen an increase in OI, Nifty futures, but Bank Nifty futures were trading in a premium. This morning, there's a sharp decline in open interest on Bank Nifty, even though September futures are trading at a premium. Do you still believe that there is room on the upside? Are you getting a sense that the upside from here on could be capped?
Yeah, so the way I see Bank Nifty is yesterday we could technically term it as a short covering rally in Bank Nifty on account of increase in price and unwound of the open interest positions. I do believe that the upside is limited at least until we cross 51,800 and 700 levels, which is the recent pivot high. The structure on Bank Nifty is actually a little weaker as compared to Nifty because in Nifty we have made higher highs, whereas in Bank Nifty we have made lower highs. So until and unless we break the 51,800 levels, I would be a little circumspect in terms of building a all-out bullish position. However, I do have a trade here, and I'm still playing for a slightly bullish upside view in which I'm looking to construct a short triangle with a bullish bias in which we will sell one lot of 50,300 put of 18th September expiry, which also happens to be the low which was defended yesterday. And we will also sell one lot of 52,500 call of the 18th September expiry. The max profit in this trade is likely to be about 3,000, and we will keep a rupee stop loss of about 3,000 given a margin of 1 lakh. The logic is very simple. Positive price action in yesterday's session, which was, as I said, a technical short covering rally. 51,500 and 51,000 puts are strong supports, and 52,000 calls a strong resistance for the near term. I expect a continuation of this up move, but also see some resistance building at around 52. Hence, I have constructed, a sideways to bullish sort of a view here.
Amit, good to hear that you're constructive. In fact, all your three calls today are on the long side. I believe you're pretty constructive on Bharti as well. What is the trade there for our viewers?
Bharti has been in a structural bull run. It's a good company, and we are all bullish on this. It's a company in which we would like to always, go long at any given opportunities. It's what one would term as a buy on dip opportunity at any given point in time. After the slight bit of correction that we have seen in Bharti over the last 5-6 sessions, yesterday's price action leads me to believe that there is some strength in this, and the trend should continue on the upside. Yesterday's price action being open is equal to low also leads me to believe that there is some bit of more room on the upside left. So the kind of structure that I'm trying to build here is bullish broken wing call butterfly, which is a bullish structure in which we will buy one lot of 1520 call, sell two lots of 1560 call, and buy one lot of 1580 call. This is a limited risk, limited reward structure in which we will target a profit about 3,500, and we will keep a rupee stop loss of 3,500. It's a secular bull run. Buy on dip is the trade here. And it has also taken support at the 20 DMA, which leads me to believe that there is enough strength in this counter, along with the positive news flow that yesterday Bharti has given out with respect to its Airtel Finance offering fixed deposit. There should be some momentum in this counter.
Thank you, Amit. That's good sort of trading strategies for the viewers. Niraj, it's a constructive call. Amit does believe that there's more room on the upside. He thinks Bank Nifty was largely a short covering-led rally, so further gains expected, and also constructive on Bharti Airtel, interestingly.
Yeah, very interesting to see all of that. And viewers, remember, this is the segment where we focus on futures and options trades, particularly option strategies, which some of you might like to log into. But a lot of you like to log into IPOs, and therefore it's important to understand about the IPO that is set to open today. P.N. Gadgil Jewellers opens for subscription. Let me actually hand it back to Samina to tell us about the issue. Samina.
Thanks for that, Niraj. Yes, it is all eyes on P.N. Gadgil. Yesterday, the day belonged to Bajaj Housing Finance. Today, it's a smaller one relative to what we saw yesterday. Well, we have P.N. Gadgil IPO that opens today. Just a quick financial, highlight of what they do. But just before we go into this, if I can get details of the IPO, that should be useful. Remember, this IPO opens for subscription today, and it closes on the 12th of September. The price band for this listing, for the subscription, is in the range of 456 rupees to 480 rupees. The issue does consist of a fresh issue and an OFS. 330 crores have already been raised through the anchor investor book. Some of the marquee anchor investors that we have are Citigroup, Tata, Axis, Societe Generale, Goldman Singapore, to name a few. It's 1,100 crore IPO, so it's actually relatively large as well. Now let's take you through what N. Gadgil does and why do we think the company is one you want to track. In terms of financial metrics and growth, let's highlight that for you first. It's a time when jewelry and gold seems to be quite a talking point on the street. In terms of growth, revenues are up 55% per annum over the period of FY22 to 24. So a very strong CAGR being put out by P.N. Gadgil. Profitability has also jumped 48% in the period of FY22 to FY24 on a compounded basis annually. Well, what we've also seen that the valuations aren't too bad. So their price to earnings is 42 times, price to book is about 5 times. Now, while this on the face of it looks okay, it's important to compare it to some of its peers, like maybe a Kalyan Jewellers, or for that matter, a Senco, or even Titan, which are all very stretched in terms of valuations. So as compared to the existing listed peers, P.N. Gadgil looks relatively well priced. Well, what are the strengths of P.N. Gadgil? One, it's been in the jewelry business for a significant period of time. So it's a legacy player in the jewelry business. And at a time such as this, when the whole world is looking at gold or play in gold, P.N. Gadgil is in a sweet spot. But the one key positive is that they have a very strong regional presence. Now, this could be viewed as a negative as well, but before we go into that, let's tell you where its presence is. Maharashtra is an important market. Pune contributes to about 60% to its top line in the financial year FY24. They also, of course, are the second largest jewelry retailer in the state of Maharashtra. Maharashtra, as a state anyway, has a relatively high demand for gold jewelry. Well, the strength is that they hold a significant market share pan-India at 17%. So while Pune contributes 60%, pan-India, it's actually not a bad play with significant market share in that space. In terms of weakness, like I said, the strength where there was a geographical sort of control that they had in the state of Maharashtra, this could also be viewed as a weakness. Now, why is this a weakness? Because of the concentration that they have in the state, expansion, any sort of more localized factors could impact the company quite significantly. What you also want to keep in mind is that this industry has seen intense competition. One is the unorganized space, which is what P.N. Gadgil faces when you talk about competition, but also big players like Reliance and Birla have forayed into the jewelry business. So they've got competition from the unorganized sector and, of course, big daddies like the Birla Group and Reliance that are entering the business. So that's really P.N. Gadgil for you. It's a strong opening, at least that's what we're expecting, with grey market premium already indicating to a very high sort of listing price. Will be all eyes on this one. 1,100 crores looking to be raised, 330 has been done by strong institutions, significant player in the jewelry business. And a time like this when gold prices are up 20%, there's quite a bit to gain, Tamanna and Niraj, from this IPO.
Yeah, it's all about the IPOs right now. I mean, day 2 today of Bajaj Housing Finance, and yesterday when we were speaking with Deven Choksi, he started by saying it's a lottery. So I can see why, because on day 1 that IPO was subscribed over 2 times. Institutional investors coming in at a 1-time subscription. So overall 2 times. For institutional investors, it was 1.07 times. Non-institutional investors came in 4.35 times. So that portion of the book saw over a 4-time subscription on day 1. Retail investors at 1.51 times, and whatever was reserved for employees at 0.32 times. I mean, it's not going to be like one of those books where you see 200 times subscription because of the size, but yeah, definitely one interesting to watch out for. All right, let's come to what's on the watch list today for NDTV Profit, the stocks you need to look for. Let's start with Ahluwalia Contracts. They've got 2 orders from Signature Global. That could be an upside for them. Easy Trip. The board is meeting on September 13 to multiple acquisitions. One assumes to, take forward their EV business. Action Construction has an order for 99 forklifts from the Ministry of Defence. HG Infra has a 781 crore LOA from the Transport Ministry, and Premier has a 215 crore order from UP Agro. So you're already seeing the order flows really push the news forward.
Well, from amongst this list, while Aarti Drugs 60 crore buyback, well known. Sona BLW has raised 2,400 crores via QIP. Tire makers could be interesting because car and truck radial price hikes are in the offing. Office is going to sell facility management ops, so could be in focus. And MOD has signed a 26,000 crore contract with HAL, so that becomes an important one.
Well, a few more on the radar is going to be Abbott India. GST on cancer drugs has been cut to 5%. Zydus Life, for the same reason, will be in focus. And Alchem Labs as well will be a beneficiary of a cut in GST on cancer drugs.
Cipla is the other one. They also will benefit from the same. Actually, this whole list of companies, Biocon, AstraZeneca, and Cipla, all in the same boat, where the increase or the cut in GST will help them. The snacks segment is the other one. Pratap Snacks, Bikaji, Gopal, all of their GST has been cut to 12%. So that makes a difference. And Bharat Seats, that's a negative because car and bike seats GST up to 28%. That will actually push up the overall costs of vehicles as well. So that's a negative. Just, on this point of impact, I don't know what you guys think. I think I can understand that sales go up if the price of snacks comes down because of GST cuts. But in terms of cancer drugs, it's definitely good for people that the prices come down, but I don't know if it's going to make a huge difference to the companies itself because that's inelastic demand. It's not like people were not buying cancer drugs because they had to pay 5% more GST. Exactly. And the company passes it on. So in terms of an actual impact, I'm not very sure of this category. I can understand for snacks.
Yeah. No, it's fair. And I think that hence it comes from a place of helping people who need...
not a stock impact.
Not a stock impact.
Or even for seats.
In terms of a stock impact, I don't see a big difference.
Agree. For seats also, I mean, a car company will take seats for sure.
Yeah, you can't have a car without
Yeah, or a bike without seat. The only point is the OEM will typically get squeezed a little bit.
Or they pass it on if they can afford to.
No, but if they are a B2B, then the two-wheeler company will not absorb the entire GST. So I think part of it will have to go for Bharat seats.
So snacks then.
Snacks.
In fact, in terms of stock market.
So are you buying Bikaji snacks today before
Pratap?
Because GST has been cut down.
Since I can't buy the iPhone, I might as well
buy the snack instead.
Stick to Bikaji snacks. Bipin Sapra,
that's one
tax
version.
partner at EY India, joining us now on the show. Very good morning to you, Mr. Sapra, and great to speak with you. Just want to get your sense that this group of ministers on GST on health insurance, then they have to make a decision by end of October. Do you think that this is something that we can actually see happening in another couple of months, or is this one of those contentious issues which could be kicked down the road even further?
I think that's why a GOM has been created, to really evaluate all the issues. So there are both sides of the coin. There is already a cost which the company is incurring because there are input goods and services which it is procuring. The output has to be, so the demand is both for exempting and for reducing the rate. How does it really stack up? How much does the company really benefit, and how much can it really pass on to the customers in terms of reduced insurances? All that needs to be really looked at to reach a decision. And I think that's what the GOM is going to do. Everything is possible and there could be a segmental benefit which could be given. I hope segmental exemptions are not given out because it really impacts the company in terms of compliances. There is a lot of cost coming in terms of credit reversals. So the whole spectrum is open. Technically, everything is possible right now.
All right. So, Mr. Sapra, let me just ask that question again, because I understand that there are two sides to it. There's a conversation going on. You're saying everything can happen. What is the likelihood? Because if there are concerns from states about loss of revenues today, those concerns continue a month from now as well, isn't it?
Yeah. So I think my gut feeling is the rates should go down. I don't expect exemptions to come in, and that's personal perception. One of the things you have to remember that from a company's perspective, these insurances which are being taken are not creditable in the hands of the companies. So any group insurance, any life insurance which the companies or the health insurance which the companies give out, there is no credit available to them, given that these are employee expenses. So ultimately, a lower 5% also benefits the companies. A lower tax also can be passed on easily, depending upon, a lower tax can be passed on. So I do see, given that there's so much of debate, at some point of time, rates do going down.
All right. Thank you so much, Mr. Sapra, for joining us, tax partner at EY India, talking about how health insurance could happen down the line. I mean, so many more up in the air in terms of online gaming as well, but just focusing on health insurance because of the kind of stock impact we've seen in those companies. Meanwhile, Rajat Bose and Sunny Agarwal with us on the show this morning. Welcome to both of you and great to speak with you as always. Rajat, let me start with you on, what we saw yesterday in the markets in terms of index and both the indices, really. The kind of recovery that we saw was actually quite impressive. And do you see that continuing well into today? Is this a day to take fresh positions on both the Nifty and the Bank Nifty?
Well, I suppose yes, because my reasons are, again, I will resort to the tools that I use. 20-day moving average was tested yesterday as well as the day before. It went below the 20-day moving average, but closed above the 20-day moving average. What is so significant about this? Last month, when the market fell, gapped down, it tested the 50-day moving average. This time, even though the Nifty was looking weak for the last, say, 6 sessions, yesterday, the bounce back from 20-day moving average gives me the confidence that we might will see a retest of the 9-day exponential moving average, which is at 25,000 now, 25,032 to be precise. So Nifty is likely to go up. And I suppose SIP Sahi hai, they have a lot of arsenal in their armory. So we need not worry so much about fall right now.
Rajat, well, that was, of course, the call on the index. But in terms of stocks, anything that's a standout trade for you this morning?
Well, I would say that I have chosen 3 stocks, and they have given a pretty good movement yesterday. So I would choose first. My first stock is Voltas. It has given a breakout yesterday, and I feel that Voltas is going to move up from here. 1828, that is the first initial resistance. After that, 1844 and 1879. These are the 3 targets, and my stop loss would be 1794. The second stock is Dabur. Dabur did excellent yesterday. After a 3-day hiatus, it has moved up again. So Dabur looks pretty good. 648 is my stop loss. 671, 691, and 713 are the 3 targets. Third stock, I quite like it. Most of my clients might be having it. That is IEX. IEX, I would put a stop loss below 206. This stock looks pretty good, and the kind of momentum it has gathered, now it is going towards completing the saucer pattern. So the first target would be 248 to about 252 and 271. All of these calls are short to medium term, roughly say about 5 weeks to say about 9 weeks, rough 1 to 2 months kind of projections.
Sunny, hi, good morning. What do you feel about the markets? I know for a fundamental analyst, it's tough to call out day-to-day moves. But the fact remains we are lacking local triggers, nothing major lined up in the near term, except the big global trigger, which is the rate cut. Between now and then, what would you advise investors to do? Tactically, go long, go short, avoid it? What is the strategy?
Yeah, good morning, everyone, and thanks for having me on the show. I think markets, if you see, even though benchmark indices are hovering in a certain band, maybe on the lower end, 24,800, on the upper end, 25,300, 400, I believe there is still a lot of excitement in the broader market, and especially companies where the outlook has been pretty robust during the June quarter numbers. So at the same time, we are seeing a lot of activity on a sector-specific development, either from the government side or company level. So case in point, EMS, or for that matter, semiconductor, or for that matter, railway wagon, infrastructure. So there are few select opportunities which are available in the market. So it's more of a stock pickers market rather than all the stocks moving in a one direction. So I believe, so recently we have initiated coverage on Aditya Birla Capital. We believe that both their NBFCs as well as housing finance arm are well placed to grow their AUM by 25% CAGR over next 2 years. At the same time, their asset management business continue to do well. Insurance business is also doing a fairly decent performance. So the fair value of AB Capital is 280 rupees with investment horizon of 12 to 18 months. Similarly, on the structural steel tube side, we have recently initiated coverage on high-tech pipes. So high-tech, all the structural steel tube players are seeing a shift of product mix toward the value-added product. And that is leading to the increase in EBITDA per ton and backed by the increase in capacity. For example, for high-tech pipe, the capacity which was at 0.53 million ton in FY23 will expand to 0.75 in FY25. Then company has further announced expansion to go to 2 million tons post FY26. So I believe the story of infrastructure growth can be played through various structural steel tube pipe industry also. And high-tech is one of our top pick along with the APL Apollo, where which is the market leader in this segment. Similarly, opportunity do exist in the railway wagon space for companies like Titagarh, Jupiter Wagon. We believe that all the companies within this segment will continue to do well over the next 2 years. So it's a good opportunity to add in the portfolio. The current correction is offering a decent opportunity to add in a medium to long term portfolio. So yes, it's a stock specific market rather than looking at indices. I believe one should hunt for an opportunity at individual stock levels.
All right. Thank you for that. But stay on with us. Sunny, Rajat, Bose coming back after this very short break. We take, the top stocks of the day and their view on it. Is there going to be a GST play? Is insurance going to be in focus? Are autos going to have a bad day? And how do the markets behave in pre-open? All of that after a very short break. Stay tuned.
All right, back with India Market Open right here on NDTV Profit. The pre-open rate's about to kick in. I mean, we'll just show them, but effectively we'll have a start which could be 30, 40, 50 points in the green. So have a good start for sure. The question only is, can we build on from there? And will banks lead the charge or will it be something else? I think that's the key thing to monitor. Insurance companies today could have a bit of a stick down, so that's to be watched out for. Tire companies could well be a leg up, so that's to be watched out for. And specifically, watch out for the pharma names because of the Biosecure Act being signed or passed by the House, US House. Then therefore, the CDMO and the CRO players, Newland, Syngene, Laurus, etc., could all be in focus. Some of the pharma companies which are cancer drug beneficiaries, quote-unquote beneficiaries, could also be interesting. Okay, wow. These are large rates. I think these rates will settle down. But, okay, let's start with some of these, right? And Sunny, I'll come to you on the pharma companies. One, AstraZeneca imports cancer drugs. Does that benefit? And two, this Biosecure Act being passed, it was anticipated. The CDMO, CRO companies had already rallied. Could there be more upticks in the Newlands, the Syngenes, the Lauruses of the world?
I think one need to understand that this opportunity is a long-term opportunity and it's a regulated sector, right? So it doesn't happen that the entire shift of market from China to India will happen in a span of 3 to 6 months. So even the players who are in US, who are developing, who are having existing vendor in India, they will take some time to ramp up the sourcing from India and ship that from the China. But having said that, opportunity is huge. What I understand is that China's export to US is close to $40 billion, and as compared to that, India is standing at $4 billion. and even a 20% shift over the period of next 5 to 10 years will triple the size of the opportunity for the existing domestic player. So yes, in the long run, definitely it's positive. In short run, I believe the entire narrative is in price. The stocks has already rallied, and maybe today we may see kind of some profit booking post this act is been enacted, and maybe after a few weeks, it's a good time to accumulate on a pullback in a long-term portfolio.
All right, quick look at what else is buzzing. Look at GSPL this morning, about 10% up. BKG Foods is having a delicious pre-open session. Please excuse the bad puns. About 8.5%, 9% up. Look at Vodafone. I want to see what's happening with Vodafone as well. After that City note, Vodafone has, after a huge upside a few minutes ago, is now seeing some profit booking coming in. So City has not really helped it really. Paytm about 3.5% up. You know, it could be a bit of a relief as well, because remember, one more thing which was supposed to happen in the GST meet but did not was to add a GST on transactions above 2,000 rupees for payment gateways. So that could have been a bit of a problem. Action Construction about 2.5% up on the base of that Ministry of Defence order. But GSPL really the winner of the day. Rajat, any view on GSPL on the charts? Let me add BKG Foods to the mix.
GSPL, you said, right?
Yes.
See, GSPL, Gujarat State Petronet, up until yesterday, it was not looking so great. But today, I suppose if it manages to stay above 445, then you would see some kind of traction coming in again. But it had a very sharp run. And so this correction that has happened up until yesterday, I would say that is par for the course. And after now, I think there would be a movement. Once it crosses 470, 475, it can even go beyond 500, because there is a flag formation in GSPL. Of course, it's not a classical flag that you get in technical analysis text, but this is a pause and the move will continue.
What about Vodafone, Rajat? I mean, for any investor who actually takes these notes seriously or looks at what to do because of it, it would be very, very confusing. One day, one brokerage house says 2.5 rupees, and another day, another brokerage house says 22 rupees on Vodafone. It's up 2% now. What would you do with the stock?
See, regarding Vodafone, what I would say is this, that this stock has become pretty dicey now. There had been buying, there had been lots of rumors or lots of news stories coming in. But now that it is falling even below 14 and sustaining there, I think crossing 1760 would be a far cry. Unless that level is taken out, you don't see much of a hope for any kind of significant significant movement on the upside. But if it were to fall below 12, then all hell will break loose. In that case, it might even go down to single digits. And already I know that one particular, I've seen on your TV channel only that I think Goldman Sachs or somebody have given a target of 2.5 or 3. That I don't know whether it will go there or not, but then it looks very weak. Daily, weekly, monthly, even quarterly charts.
Okay. Well, flat is flat can be though. A clutch of other stocks active, but it's important to highlight Vodafone, the bear versus bull case. Harsh Johnson for the same. Harsh, good morning.
Good morning, Niraj. So, of course, Goldman Sachs, Citi, two divergent views. Both have highlighted downside risks to their views. But first off, bearish is Goldman Sachs. I'm going to start off with that one. They're expecting market share erosion of 300 to 400 basis points in the next 3 to 4 years for Vodafone Idea. However, Citi is suggesting that competitive intensity is likely behind, especially on the largest pocket of competitive intensity that we've seen in terms of timeline is behind now, and therefore competitive intensity should ease going forward. So that's a little bit of a positive where Citi is concerned. Again, on the bearish side, neutral on cash flow. To do that, essentially what Goldman Sachs is alluding is ARPUs, which is average revenue per user, is to go up anything to 200 to 270 odd rupees, which is where the ARPU seems to lie at. But where the bull case is concerned, Citi seems to suggest that there's a clear shift in monetization that the leader is seeing, which is Jio, and therefore ARPUs may in any case get better, which should aid this case of 200 to 270 in terms of average revenue per user for cash flow break even. Third is with regard to AGR dues. AGR dues, of course, FY26 onwards, larger spectrum dues will start to accrue. That's the downside. The upside here is that the fundraise plus the 4-year moratorium available to Vodafone Idea should definitely help the cash flow case in the near term. Of course, will continue to remain due, and that will be an overhang. But nonetheless, just the fact that a positive outcome could be possible would be a positive on that count. In terms of valuations, trades at 24 times FY26 EV to EBITDA is what Goldman Sachs suggests. This is, of course, FY26 EV to EBITDA. Bharti, in contrast, trades at half of that, at 12 times EV to EBITDA. Where the bull case is concerned, from Citi, they are suggesting that Vodafone trades at 12 times FY28 expected EV to EBITDA, discounted for FY26. They've given it a target price of 22 rupees on the back of that. And therefore, two divergent views, two different methods, and one looking at the positives, the other at the negatives.
Right. Thank you for that, Harsh. It's bull versus bear on Vodafone Idea. This morning, of course, the stock is expected to get a little bit of a bump up in early trade. It's a flat morning. Don't expect too many fireworks at the get-go, at least. Rajat, one sector that had it quite good in trade yesterday was FMCG. The index was up 2%, closed out at a record high. HUL gained 3%. ITC was up nearly 2%. Godrej consumers, namkeen stocks, if you're going to put that in the FMCG pack, are all going to do really well today, or have some parts will do well. What is the trading strategy in some of the frontline FMCG counters?
Well, if you look at it, then Hindustan Lever, ITC, Nestle, as you said, Godrej Consumer, all have moved up. But you contextualize the move. Yesterday, things were very somber at the beginning. And at that point of time, it was FMCG that was ruling the roost. Of course, they closed at the day's high or near the day's high. But today, people may not be so keen because the FMCG move, if you look at Hindustan Lever, maybe Nestle is a laggard, but ITC and Hindustan Lever, they had been doing pretty well. So I do not think that Hindustan Lever would cross 29.50 and sustain above that. There could be a minor correction, but it is posting an all-time high that is pretty good. I mean, I would say that this looks really encouraging. But generally, whenever Hindustan Lever gives such a move, you will see that it retraces to consolidate. Same should be your situation in case of ITC. It was a negative candle day before, and yesterday we saw a good run up. But ITC needs to take out 515 decisively. In that case, if it does, 524 to about 527 would be the target. If you have to buy any FMCG, I would say that is ITC.
Just want to get your view, Rajat, on two companies that have been buzzing. One is Dixon Tech, news today, and we spoke with Atul Lal a short while ago. Tie up with HP, stock up 2.5% nearly in the pre-open session. What do you think on the charts? And Suzlon is the other one. News flow is non-stop in Suzlon. And do you think further upside here?
Yes. See, Suzlon has moved up considerably, and now Suzlon is still showing momentum. So long as the momentum remains, I would say that you can continue. But whether the momentum will retain at this juncture, because it has already moved so much, I would rather say that it is likely to see more consolidation, because the 20-day moving average is not being taken out by it. So if it manages to get past the 20-day moving average, which is around, say, 77, in that case, 85 to about 87. See, Suzlon saw 100 11 years back, or I think not, it's 15 years perhaps. It has seen triple digits. So between 85 and 97, there would be considerable selling pressure. If that selling pressure is taken out, then Suzlon can move up. But there is some concerted interest that is playing in the stock, so maybe it will do that way. What was the other stock that you mentioned?
Right.
Sorry?
Dixon was the other one, Rajat.
Dixon Tech, right?
Yes.
Okay. Dixon Tech is a stock to buy because it tested the 50-day moving average yesterday and it posted a piercing line, kind of a positive candle. After that, there is every possibility that both the 9-day as well as the 20-day moving averages, they are around, say 12,622 to about 12,738. If this range is taken out, then Dixon can move further up and post a new high. Dixon, so long as it doesn't fall below 11,400, there is absolutely no problem with the stock. At dips, people will come and buy.
Very quickly, do you have a quick take, hot take on Vodafone?
I would say that if it goes up, steer clear of.
Okay. So that was for Sunny, but we'll come back and ask him. But meanwhile, the hot take is really how the market's open, isn't it?
Yeah. Yes, indeed. Would be very interesting to see how the markets open. Remember, we're watching out for banks looking okay. Actually, since we have about 50 seconds, maybe, Sunny, you want to answer that Tamanna's question in 30 seconds? Vodafone, do you have a hot take there?
Niraj, I would like to stick to other larger players like Bharti and ride the telecom story rather than betting on Vodafone at a current juncture.
Okay, not quite moving though, Vodafone as well. So keep that in mind. But, well, 25 seconds left. We'll watch out for Vodafone and Bharti. Both of them have come in conversations today. Bharti was a call given by our derivative guest earlier in the day. So watch out for telcos in the session today. I dare say watch out for banks and watch out for insurance stocks, and let's see if on open some of the HDFC Lives and SBI Lives, both of which haven't had a very good month of August, show a bit of a corrective move or no. But here come the first rates in the green, I would reckon, in line with what the implied open was suggesting. So, well, today is not a day of surprises, I reckon. Banks participating almost in the same vein. Mid caps and small caps should come up on your screen next. And let's see what's happening there. Well, strength there. Talking about the possibilities of SMIDs participating, and well, the mid caps certainly are, the small caps are. So quite unlike yesterday, mid caps and small caps are doing well. Let's get the heat map up on the screen and show you what's moving and what's not. Very little red, but yes, the life insurance plays right down here. SBI Life and HDFC Life shouldn't surprise because the month of August wasn't good for both of them. I think ICICI Pru has done okay, so maybe that stock could do well. On the gaining side, well, Divi's comes in the pharma list, but tech it is, which is doing well. I think we've seen enough and more reports today. Motilal Oswal note on IT, Jeffries note on IT as well. 2 days ago, there was a Morgan Stanley note on IT talking about how IT stocks look poised for gains. So IT is ruling the roost along with some healthcare stocks. Axis Bank marginally in the green. There is strength in Hero MotoCorp, BPCL, but no runaway gains for the gainers. No large losses for the losers as well. It's that kind of a outcome on the large caps at least. Maybe mid caps and small caps have a lot more, but the large caps, IT is certainly standing out, Tamanna.
Yeah, absolutely. And in Infosys, for maybe more reasons than one. Of course, the overall IT boom. But remember, Infosys has seen a government agency close all the insider cases that they were looking at for Infosys. 16 cases have been closed. That would be a big relief, even sentimentally, really, for Infi. So that's the story there. Nifty holding up above the 25,000 mark, just thereabouts, but still holding up. So that's important. Let's look at some specific movers this morning. Vodafone is the first stock that we're looking at. Goldman Sachs says 2.5 rupees. Citi says 22 rupees. Which way does the street swing when it comes to the company? 1.5% up in trade right now. Vodafone Idea buzzing today. IREDA is the other one we're talking about. They've signed an MOU with SJVN. It's a 900 megawatt hydropower project in Nepal. Stock is 3% up. Let's look at the GST impact players. We know Bikaji was buzzing in the pre-open rate. Does it continue to? Yes, that's completely scrumptious. Bikaji, Pratap and Gopal all up between 5 and 6.5% this morning. What about pharma companies? Remember, there is the GST on cancer drugs has been reduced. 3% up for AstraZeneca. 20 microns also doing fairly well. I don't know why we're seeing 20 microns. Biocon is what we need to see over there. Easy Trip is the other one that we have been looking at, and they have a board meeting on 13th. They're going to discuss acquisitions, among other things. So that stock is buzzing. Dixon is the other one which is on radar. They have an MOU with Hewlett Packard. They will have 4 major brands, already Acer and Lenovo in the bag. Now it's HP as well. Stock also buzzing this morning. GMR Airports is the other one we'll add. They will acquire a stake in Delhi Airport, and GMR also not doing too badly. So you have enough positive news out there this morning, Samina.
It's not a bad
for reactions, yeah.
Especially compared to how they've been over the last few days. The Nifty 500 is trading with a marginal gain. Lots of stock-specific trade that's driving today's session. A quick check on the broad. There you go. That's the broader market recovery after yesterday's underperformance. The mid-cap, small-cap, and the Nifty 500 all trading in the green and outperforming the benchmark. On the gaining side, you've got a handful of stocks that are in focus this morning. Tamanna has highlighted a few that are reacting to the drop in GST. So you've got your Bikaji, that's your top gainer in trade. But along with that, a few more that are looking good. 197 Communications is having a good morning. Lower crude prices garners well for lubricant companies. So Castor Oil, after not participating in yesterday's up move despite lower crude, is playing catch up with a 3.5% up move in trade right now. Well, Coforge is the other one that looks good in early minutes of trade. Chemical companies aren't doing too badly. You've also got stocks like IRB Infra, which we should check on to see if there's a reaction to those improvement in toll numbers. IRB Infra on your screen up 2% as we see it. You also had a few more names to track this morning. So HAL, Action Construction, that would be Premier Energies. These are all the stocks that would be reacting to order wins. HAL, not too excited about that order win, but still trading with a good gain. Premier Energies, after a 10% up move, sees a gain of 3% this morning. While we are at it, Ola Electric had a swing in trade yesterday. Open gap down 4%, went home with gains of 4%. This morning, it trades flat. Deep Industry was your other big gainer on back of a significant order win yesterday. After gaining 20%, the stock is seeing a 3% cut. A little bit of profit taking has never hurt anybody after such a sharp rally. Chemical companies are doing well. Fertilizer stocks are doing okay. So I think it seems like the crude play that we missed out on yesterday is playing out in today's session. While we're at it, a quick check on OMCs, HPCL, BPCL and IOC, if we can get a hang on how they're doing. Fertilizer companies, like I said, looking good. BPCL still not reacting too sharply to that fall in crude. HPCL, on the contrary, trading negative. So all in all, it's an interesting morning. You've got a handful of gainers. You've got lots of losers as well. Raymond Lifestyle, once again, seeing a 5% circuit on the downside. Post-listing, the counter has been on the sell side, hitting lower circuit pretty much every single day. Well, you've also got insurance companies that Tamanna and Niraj have already highlighted for you. Some sort of cuts coming in, the likes of Godfrey Phillips that trades quiet, Bajaj Finserv not having too much of a great day, but all in all, it's a good day of trade. You've got very specific trading activity, but I think the larger theme is GST, and hence pharma companies, snack companies, and insurance companies on the sell side.
Yeah, snacking in particular, some sharp up moves out there, and insurance rightly because of, I think, the the GST, but also the AP growth numbers have looked so wobbly that I think these stocks are starting off
Also, I think, Niraj,
lower.
we talked about this yesterday where crude ancillary was not playing out. But if you look at today, some of your pharma, some of your fertilizer stocks, tire, if you can pull up tire as well, actually, and lubricant stocks are doing quite well. While OMC is still not coming in with too much confidence just yet. Tire stocks trading with a slight positive bias. Remember, there is a price hike expected from tire companies, while crude has a positive impact on their margins because it's a key input for synthetic tires. The fact remains that rubber prices are very volatile, and that could be one reason why you're not seeing a very easy up move for tire companies in terms of reaction.
Yeah. But I think insurance stands out. So let's start with that. And Rajat, would you go out and trade any of the insurance names after they've started off a couple of percentage points lower? Would you sell HDFC Life or ICICI Pru or SBI Life?
Yeah, I would say that HDFC Life, to me, I think SBI Life is the weakest. SBI Life, one can sell. It can go further down because it has broken the moving average, the trend line. So SBI Life is one stock, except I would say that even ICICI Pru looks pretty weak, but not as much as SBI Life. But there is weakness also in the health insurance or say general insurance companies like ICICI Lombard. Even that, I suppose, if it falls below 22.20, then it can go down to 22.11, 22.5, that kind of levels. Even NISCL, New India Assurance, that is also looking pretty weak. So LIC, I think, if it manages to get past 1045, then the next target would be 1053 to about 1057. LIC is the only stock that I can find that it is showing some good momentum on the upside.
Okay, so nothing great to talk about as far as insurance is concerned, but Sunny, just your take on IT. IT is having a great day this morning at least, and because of other reasons, there are a whole bunch of notes. There's a Bernstein note as well, which is maintain and outperform on Infosys and TCS. Would you go out and look at some of the IT majors right now, Sunny?
Yes, definitely ahead of the US Fed meeting on 18th, where we are expecting moderation in interest rate in US economy. Risk reward do look favorable for large cap IT companies, and obviously in terms of demand environment, versus behind for all the large cap majors. So companies like SCL Tech definitely can be on radar. Tech Mahindra, where we have seen a very bad year last year due to low base effect. We will see a very good earning growth in FY25. Coming to mid-sized companies, First Source Limited, we feel again a company which will grow at a mid-teen numbers and at the same time trading at a lower end of valuation. So FSL, First Source, is the one company which we like. Among the ER&D automotive space, yes, obviously KPIT is our topic. And Tata Tech post listing, we have seen a kind of a slumber performance from the company. But what we believe is that next 2-3 years, we may see some marginal uptick in a margin and in EBITDA margin, and risk reward do look favorable for Tata Tech if somebody is a medium to long term investor.
All right, quick news flash there on your screen. The UK government may give a grant of £500 million to Tata Steel. Let's just pull up the stock and see if there's any reaction really on the chart coming in as well. The steel has, as a sector, been under a lot of pressure. Hot rolled coil prices domestically have been squeezed as well. Chinese demand, etc. All of that. Sunny, anything that you find interesting as far as Tata Steel is concerned? Stock now on the up move.
I think the entire steel sector is grappling with the problem of dumping from China, and that is hurting their realization and margins. And I believe recently there was a case put ahead of government to instill a dumping duty on dumping by the China on stainless steel. And that is something which is worrying the entire steel as a sector. So right now, I would like to remain neutral on stainless steel industry and would better like to ride on this metal and mining play through mining companies like MOIL or for that matter GMDC, where we have seen a very steep correction post correction in the commodity prices globally. So it's a good opportunity if somebody want to ride on mining industry to add on to the MOIL and companies like GMDC. As stainless steel player, we continue to remain neutral at the current juncture.
Right. Thank you very much, Rajat and Sunny, for joining us today. That's a view coming in the markets. The Nifty and the Sensex both trading with gains of 0.25%. The breadth is looking healthy. Then the broader markets are actually outperforming the benchmark, unlike what we saw in trade yesterday. Lots of pockets of interest. So you've got sectors that are reacting to GST cuts. There are sectors like insurance reacting to no GST cuts. And you've also got counters that have bagged significant orders that are having a positive impact on the sentiment on the street. Some of your underperformers in the tech pack like Wipro are trading higher. ITC is also continuing to build on its buying activity that we saw in trade yesterday. All in all, it's a decent Tuesday morning. Just changing gears, the Society of Indian Automobile Manufacturers, or SIAM, more popularly known as, is hosting their 64th annual convention in Delhi today. My colleagues Tushardeep Singh and Mugdha Mishra are at the venue this morning. Tushar and Mugdha, what's on the agenda?
Well, the agenda is pretty clear. The SIAM convention. The first thing is Nitin Gadkari is going to come, Minister of Heavy Industry is going to come, and every year we have seen he comes up with some big headliners, and that's something we will be watching for. What he says today will set the tone of the entire conference. And besides that, we'll be talking to all the major corporates from the auto world. First up will be Maruti, where at 11 o'clock you will be able to hear Maruti Suzuki speak to us and tell us their plans and what are they expecting from this year. The biggest point of conversation right now is the slowdown that has started over the last couple of weeks, couple of months, where we have seen sales number taper down a little bit. So now what is the festive season looking like, and how's the growth trajectory is going to pan out? That's something that we are going to watch out what are the companies expecting. And we are talking to all the heads today, including Maruti Suzuki, as I said, then Tata Motors, Hyundai, which is coming out with their IPO this year. We all know that, and we will be keeping an eye on what they have to say. But Tushar, you have been closely monitoring the two-wheeler space. What's going to happen there?
Exactly. The scenario is exactly opposite, Mugdha, in the two-wheeler space. After a couple of years of downturn for the two-wheeler space, where the commuter motorcycles were not seeing an uptick, the demand is finally coming back, which indicates a revival in rural demand, so to speak. The monsoon has been really good, so for them, the festive season looks really, really well. Hero and TVS doing really well. Their numbers have gone up substantially. Even Bajaj domestic sales are up about 30% in August. All of that bodes well for the rural sector. And even Bajaj shipping about 30% more motorcycles locally indicates premiumization is still the key trend in the two-wheeler space, because about 70% of Bajaj's volume still comes from the Pulsar cluster brand.
All right, so there's a lot to watch out for, and taking a cue from Tushar's assessment, their focus is also shifting towards small car market, which has been a little bit of a slowdown over the last couple of years. So will we see the rural revival taking the small car segment forward? We will keep an eye on all of that and much more throughout the day today.
Thank you so much for that, Mugdha and Tushar. So we have a big team of NDTV Profit there at SIAM, and we're going to get you all of those interviews through the day on a sector which is very much in focus. And keeping the focus with the space, we're speaking now with Arnab Banerjee, Managing Director and CEO at CEAT. Mr. Banerjee, thank you so much for joining us this morning on NDTV Profit. Absolute pleasure to have you here.
Morning.
Yeah, and we're speaking at an interesting time for the industry, and especially tire companies in focus because of the price hikes that have been taken. Let's start with that bit. The hikes, I believe, in radial tire prices, raw material prices are also up. How do you see this situation evolving?
Yeah, post Q4 last year, we have had sharp price hike in raw material. Q1 and Q4, the raw material hike was about 5%. Then Q2 and Q1, again, about 4-5% raw material price hike has happened. So the finished good price hike has not been commensurate with the raw material price hike. You saw our margins contracting in Q1 to 12%. And the same trend continues. So margins will be under pressure in Q2. And we expect the raw material basket to even out in Q3 and may moderate a little Q3, Q4 onwards.
What is the quantum of price hikes that have been taken, Mr. Banerjee?
Yeah, it's different for different categories. The trucks, radial and passenger has been more aggressive from our side, about 4% plus, but not so in some of the other categories. OEM price hikes come with a lag of a quarter because most of it is indexed. So that's also inadequate. So overall, if you take the basket of price hike, another 2 to 3% price hike is required. And we may take about half of that in the month of September.
So you've got about a 1.5% increase in price hike or increase in price for Thai companies expected as early as this month. Mr. Banerjee, hi, it's also Samina joining in. While I do understand that the key raw material for a Thai company like yourself is rubber, and rubber prices have been extremely volatile, and there's been constant conversation and talk about how rubber prices are only going to increase from year on. Do you feel like this price hike that you're going to undertake in September could negate the increased rubber prices on one hand, and on the other hand, you've got lower crude prices, which generally garner well for a tire company in terms of synthetic tires at least. How do both of those pros and cons play out in terms of margin impact?
Yes, so India is rubber deficit. So hardly 60% of the requirement of natural rubber is produced inside the country. There is always a price arbitrage between domestic rubber prices and international prices. However, this year, this difference has gone on to be too high. About 30-40% higher is domestic rubber, which is seldom seen. It is at a 15-year high. Availability of rubber has also been patchy. Now it's kind of evening out. This kind of volatility is not seen regularly. If the prices are flat, albeit at a high level, we can manage the margins through appropriate pricing measure. Coming to crude, yes, crude is trending down. However, the crude intermediates, which lead to other raw material baskets like synthetic rubber, like fabric, etc., are yet to moderate. So if crude stays at these kinds of level, a significant part of the RM basket will trend downwards in Q3.
Banerjee, that's fantastic to know, because we've always tried to understand the connection between the two and going beyond a stock market reaction. Possible to quantify for me, if crude stays at these levels, like you said, it could significantly reduce your raw material costs. Give me a broad range of how much of an impact would that have on margins for you? And that would, I'm guessing, be from the next quarter.
Yeah. So this quarter, already we have seen a raw material basket going up by 4-5% over Q1. So this quarter is almost coming to an end. Next quarter, it depends on how natural rubber will behave, because there are, as you rightly said, there are two aspects. One is the natural rubber and the other is the crude derivative. So if the interplay cancels them out, then we will be at a flat kind of trajectory. If natural rubber comes down significantly, only then the raw material basket will be affected positively in totality. So we have to wait and see which way these two different components of the raw material baskets behave in Q3.
I want to talk to you about premiumization, because that was the big focus for the company in the last few quarters. And I believe it's playing out quite well for CEAT as we see it, at least in this quarter. Looking ahead, how much would you like premium products to contribute to your top line? And would it be a fair assumption for me to make that the premium segment obviously garners better margins? So if you sell more premium tires, it's not just going to improve your top line, but bottom line as well significantly in the next few quarters?
Yes, if you look at the passenger tire market, the market trends are helping us, because 50% of the new car sales today is SUVs. People are buying bigger cars and traveling longer distances. We are moving the brand from a commuter space to the explorer space, a long distance traveler space. The Crafted for the Curious campaign, which we have started recently in Q1, is going to see significant investments in various forms and formats across various media channels. That's one. We are launching significantly different platforms like Cross Drive, which will help us go on the highway as well as mild off-roading, like Sport Drive, which is meant for the luxury cars. At luxury end, India is doing phenomenally well in terms of new product launches and sales. So new product development and continuous channel and sales force education. So we are going to invest significant amounts of monies in R&D as well as marketing to change the mix. And as you rightly said, these are margin accretive. And it will take the brand from a commuter space to a premium space where the customer is willing to pay a lot more than a commuter tire.
Mr. Banerjee, just want to get your sense on the thought, and a lot of analysts are saying this about CEAT as well, about how you're trying to de-link profitability from raw material swings. And tell us about the structural changes there that are being put into place.
Right. So if you compare the industry 5 years back or 10 years back, even 5 years back, I think some amount of pricing independence has come into the industry structurally. If you take the passenger car tire market, there are about 7 or 8 fierce competitors. The market leader has less than 20% market share. So when in such a competitive market, the pricing independence has emerged as a positive. And not just for CEAT, for many of the other players, we can price significantly up or down depending on our brand strategy and channel strategy. If you take the two-wheeler or the truck bus radial market, it's a consolidated market. In the sense, top 2-3 players have significant share of the market. There, the independence is still emerging, and it is lower than what is there in the passenger car tire market. But overall, as a basket and replacement, I think we are moving towards more pricing independence in terms of competition.
Mr. Banerjee, just changing track a bit, I want to understand how you are seeing the demand scenario. And there's no clear picture there as far as the whole industry is concerned. Passenger vehicles is a different story. Looking a little troublesome, perhaps. Two-wheelers, slightly better. Of course, two-wheelers, you are the leader in market share, etc. But how are you seeing the demand scenario play out? And is there cause for concern as we see inventory levels also build up at dealerships?
I think when you are talking about demand scenario just now, as you spoke, you are looking at the OEM figures, the SIAM figures.
Yes.
Right. So that is where the growth has been flat in passenger, the growth has been flat in MHCV segment, and it has been very good double-digit kind of growth in two-wheeler as they are trying to match up the pre-COVID levels. So it went through a trough and now it's coming up. However, in the replacements segment, it is a completely different scenario. We expect strong single-digit growth in both MHCV as well as in passenger car tires. We expect close to double-digit growth in two-wheeler tires in the replacement segment. The rural market is coming back. In fact, so far, the rural market growth in two-wheelers has been superior to the urban market growth. There is significant amount of sales for CEAT in international markets. About 20% of our sales comes from international markets. There, the order book is pretty robust. From various geographies, we are de-risked in international business. It has performed in strong double-digit already. So overall, if you take all these segments, including the slowdown in OEM segments, we are still gunning for a double-digit growth for the entire financial year.
Banerjee, talking about exports, and I know this was last quarter, and bring me up to speed if you've already started, entered the selling to PVs and truck bus radial market in the US. I know it was expected to be launched in the first quarter of this fiscal. And how much is exports contributing to your top line? And because it's a lower base, I'm assuming right now, the potential to grow would be so much more.
Yeah. So as I mentioned, export contributes to 20% of our top line, and it is margin accretive at the EBITDA level. So the more we export, the better it is for the margin overall. And there are three categories
exporting to a significant number of countries. I mean, which geographies are you currently exporting to?
Yeah, our focus markets are three, which is Europe, Western Europe to be specific, US and the LATAM, and Brazil being the largest country in the LATAM. So three focus geographies and three focus categories, which is agriculture radial, truck bus radial and passenger radial. So it's a 3x3 kind of focus area, and which is what will give the bulk of growth in export. And we want to take this saliency up from 20% to 25% in about 3 years' time. So given our entire growth plans, this means almost doubling exports in 3 years' time.
Mr. Banerjee, good morning. Just one question here. What is the scope of exports looking okay in a world which is slowing down? Parallel to that question is also the China impact, because all manufacturing, because China is not investing in infra, the belief is that they are investing in all things manufacturing, dumping, and reducing end product prices in global markets. Any thoughts there?
Yes, of course. China is a very serious competitor in all these markets, and so is the top 5 brand globally. So we fight competition in a wide spectrum, and in an economy which is slowing down, let's say in Europe, there is a perceptible shift from premium to value brands, and that's where we come in as CEAT. We have got about close to 1.5% share of the total market in Italy. We have got a good legacy brand equity in Italy. Likewise, now we are trying to have good market access in the other European countries like France, Germany, UK, Spain. And this shift to value brand and our small base, I don't think is a constraint for significant percentage growth in exports in Europe, and likewise in US, likewise in Brazil also.
You know, keeping in mind that you're working with rising demand, as you believe, are you at optimum capacity utilization right now? And also, if you are you investing in Capex to sort of upfront that for future demand?
Yeah, we have indicated that we will be investing about 1,000 crores this year, out of which about 750 crores is growth Capex, 250 is maintenance Capex. We won't have a Capex cycle as such. That is a management decision. We would like to invest a similar amount every year. So around 1,000, 1,100, 900. Last year was 860. This year is 1,000. Going forward, we will be keeping on investing regularly in Capex so that our capacities keep growing. Right now, we are good for 15,000 crores as we speak. Barring truck bus radials, we have headroom for growth in two-wheeler, in passenger, and also investments in bite size are going on in two-wheeler and four-wheeler as well. Our Chennai plant for TBR is coming up for production probably this month itself. So that's where we have capacity utilization at the fullest, but we have enough headroom to grow otherwise.
You know, how do you consider funding these expansion plans? I mean, is it internal accruals? Is it debt? Are you looking to raise funds? Because, of course, expansion always comes at a price. And also, if you're doing this, would you even consider inorganic expansion? Would you consider buying out the smaller players with an increased focus on the export market? It may not be such a bad idea to go out shopping and pick up some of those international smaller players who are maybe currently struggling.
Yeah, to answer the first part of your question, we have enough internal accruals to fund the expansion. Our debt position is comfortable. So when you don't have a huge Capex cycle and instead you do bite-sized Capex every year and you maintain a profitability in a tight band, I don't think funding will be an issue going forward. It's not an issue right now as well. Coming to the inorganic growth question, we don't have anything on the plate at this point of time, but are we open to looking at it? Yes, we are.
All right. Thank you so much, Mr. Banerjee. That was Arnab Banerjee there, Managing Director and CEO of CEAT. Says that, the replacement part of the business still seems very, very robust. Remember, that's over 50% of the revenues come in from replacement. as well. And yeah, it's going to be a day when autos are going to be in focus for various reasons, especially in passenger vehicles. That is a bit of concern as far as the latest data. But let's just get you a sense of what is buzzing right now in the markets. Just look at Paytm. Now, I'm not sure if there's any major news story here, but the Paytm stock really on fire today, nearly 7% up. Bikaji Foods expected because of the GST kind of response they've got. Coforge also in focus. A couple of brokerage notes out there, and all of IT is also in focus today. So all in all, not a bad morning at all.
Yeah, only bad morning for the Deep Twins. Yesterday up 20%. Today Deep Industries is down about 6% in trade. So serious profit booking that we're seeing in this stock in trade after the big up move. But another stock in focus is NHPC. That stock is doing very well for its, in terms of the business at least, it's doing very well for itself. The reason being, one, there's significant hydro capacity addition expected by FY 26-27 for NHPC itself, and they have a new MOU for pump storage systems. They've revised the previously signed MOU with Maharashtra government, and the sign for the new MOU is for a total capacity of 7,350 megawatts. Let's get in Mr. Rajkumar Chaudhary, the CMD of the company, to talk about this and more. Mr. Chaudhary, good having you. Thanks for joining in. I hope all is well. Before I get to the bigger picture of the capacity additions over a period of time, let's talk about this new MOU. 7,350 megawatts seems large. Tell us a bit about this.
Yeah. We have signed a MOU. You are probably asking about the pump storage scheme. So we have signed a MOU with the state government of Andhra Pradesh, Maharashtra for pump storage scheme. And we have signed a MOU with the Gujarat government also for one of the pump storage scheme. And we are working total capacity 11,340 megawatt. Out of that, we have 4,350 megawatt. So we have all in the DPR stage, and PFR we have completed for 2,600 megawatt. The rest of the capacity 4,300 megawatt, we are in the stage of preparation of the PFR. For 2,600 PFR, we have already submitted to CA and CWC. And for the DPR stage project also, PFR, we have already submitted to CA, CWC. It is in the clearance stage.
Got it. Sir, how does this pump storage systems revenues work for a company like NHPC? So the headline that we get is that there's a 7,350 megawatt contract, hypothetically a contract word. How does this accrue in terms of revenues and profitability for NHPC typically?
Yeah. So what is happening around for pump storage scheme, we will get the input energy through solar power, and we store that energy by pumping to the higher reservoir, upper reservoir, and during the peak hour, during the hour it is required, so we will start the pump storage and the water will come from the upper reservoir to the lower reservoir and we will get the peaking power. So around 15% of the revenue we are expecting that we will get from the pump storage scheme. Majorly we will continue focusing on the conventional hydropower project.
% revenue. So let's say if it's 1,000 megawatt contract, what does it translate in terms of revenues, sir?
1,000 megawatt project, it is the same. That return on equity, will put their equity 20%. In the pump storage scheme, 80% loan and 20% equity, where conventional hydropower, 70% loan and 30% equity.
Got
so
it.
return on equity is 17%. So whatever the, if you say 1,000 megawatt pump storage scheme, so the total cost of the project will be around 5,000 crore. Out of 5,000 crore, 1,000 crore will be the equity. So 1,000 crore equity, 17% of that, 170 crore per year, we will get the return on equity.
Got it. This is very helpful. Thank you so much, sir. So you have identified schemes, I believe, with a capacity of 18,190 megawatts. No allocation as yet in FY25 Capex, so I'm guessing the groundwork starts in the next couple of years. Would that be a fair assessment?
Yeah. That is because you know that 7,144 megawatt is the present capacity, installed capacity of NHPC. And subsequent year, this 2024-25, we are going to commission 800 megawatt Parvati power project. Then apart from that, 300 megawatt solar power in Bikaner, 88 megawatt floating solar in Omkareshwar Reservoir. So and 100 megawatt in Andhra Pradesh solar power. Apart from that, 3 unit of the Swansea Lower. So 250 megawatt each unit. So we are going to commission 750 megawatt in the month of March 25. So that is the capacity addition during this year. So total capacity will be around 9,909 megawatt. Then next year, 25-26, we are going to add 120 megawatt Rangit 4 project. So that in that case, the total capacity will be, and some more capacity of the Swansea Lower. So in this way, once the 27-28, we will commission all under construction, 10,763 megawatt under construction. So we will commission the project except the Dibang. Dibang is 2,880 megawatt. So that project will be commissioned in the financial year 32.
Okay. So, well, the expectation as per what people are trying to figure out, I mean, the hydro capacity addition, I believe there is some 1,000 plus megawatts of solar capacity addition as well. The belief is that the installed capacity with regulated return will probably grow by about 50% in the next 3 years. Is that possible?
Next 4 years, we are going to double the profit. The profit after tax. So in the next 4 years, means by the end of 28 financial year, profit will be, presently it is 3,700. So at the end of financial year 28, during the financial year, we will get profit after tax more than 7,000. So almost we are expecting double.
Got it. Okay. Okay. Well, I was going to ask you, sir, that estimates say that your profit after tax compounded annual growth rate could be 29% over 3 years. You are saying it will be a slightly lower number. It will not be 29%, maybe about 20-21% odd.
Yes. Yes, you are right.
Got it. And revenue growth from where it was in FY24, would it more than double in the next 4 years?
Almost. Presently, it is 9,000 crore. So from 9,000 crore plus, it will double. Revenue also, it will be double.
Got it.
The EBITDA margin will be almost same, 57% or like that. So it will be double.
It will be double. What about operational metrics, sir? You reckon that operational metrics could improve with capacities moving up in size, or will they be steady?
Yes, same.
They will remain the same. So EBITDA number growth will not be more than the revenue growth per se.
No.
Got it. The other question is Capex. I mean, the Capex that is envisaged in FY25, I believe about 12,000 crores, and then the other Capex kicks on. Would you be sufficiently funded via debt and internal accruals, or would you believe you will need to raise some equity capital, sir?
During financial year 25, our Capex is 11,762 crore.
Exactly.
That we are going to meet through our internal accrual and through monetization through securitization of this free capital return on equity of Dulhasti Power Station. So around we are expecting 2,000 crore we will get from the Dulhasti project and internal accrual. So we have planned our Capex in a way that we will fund it through our internal accrual.
Got it. So nothing that you would want to raise via equity capital at all.
No.
Got it.
Even we have planned till 2032 will be 23,000 megawatt capacity, and the total capex infusion is almost more than 1 lakh crore. So that also we have planned through internal accrual, through our profit, and through monetization.
Got it. My final question, Mr. Chaudhary. We've spoken about some very impressive growth numbers in the next 4 years. But is it safe to assume that FY25 will not be a very strong year on growth because a lot of new capacities coming on stream are only happening late FY25? So FY25 would be flat and then growth starts from FY26?
Correct. You are right, because our revenue is basically from the power generation. So generation will be almost flat because our capacity addition 800 megawatt Parvati 2, it is getting completed during the month of December, and commissioning of all the units, so probably it is in January 25. So we will not get much power because almost February and March, 2 months we will get the generation. But I will share with you that after the commissioning of Parvati 3, it will benefit the generation of the Parvati 2. After the commissioning of Parvati 2, it will benefit the generation of Parvati 3 also, 1100 to 1200 million unit annually. So that is also going to add to our revenue. Suvansi Lower, I mentioned that at the end of March. So we will not get any generation benefit during this financial year. So this financial year, we are expecting that it will remain flat and almost same generation and same profit, same revenue we will get.
Got it. Okay.
Accrue during the next financial year.
I get your point. Okay. We'll leave it at that. Mr. Chaudhary, wish you all the best for all the capacities being added and more. Thanks for taking the time out and speaking to us.
Thank you.
That's NHPC saying that substantial growth will double profit after tax over a 4-year period, slightly lower than what the street was working with. But FY25 will be a flat year. FY26 onwards, the numbers start picking up. It's still an impressive number if they want to double profits over 4 years. The stock flat currently. The markets too flattened out completely, but for Nifty IT, which is up about 0.5% or slightly over 0.5%, banks are sulking in trade. With that, it's a wrap on this leg of India Markets Open. Thanks so much for tuning in. Up next is Talking Point. Thanks for tuning in to Talking Point. I'm your host, Niraj Shah. Our guest today is Niraj Agarwal, MD of Ambit Investment Managers. Niraj, great having you. As always, thanks for taking the time out.
Morning, Niraj. Thank you for having me over.
No, the pleasure is ours. So, well, we are closer, Niraj, to the big Fed event than we were. It's an interesting conundrum in that the markets may have been disappointed if growth was very strong, because then the markets would have thought that, oh, the Fed will not move on rates. Now the growth has started to shake a little bit, and therefore the markets believe the Fed will cut rates, but because growth is wobbly, should one be worried? So the market is finding its own reasons. I'm trying to understand, how do you think about risk assets if we are looking at a period of the next 3, 4, 5, 6 months of some significant rate easing by global central bankers?
So two things, in this whole discussion, we often made valuations as a third key important variable and the third key pillar of this whole situation. We're just looking at macro and the news flow and the possible impact. Now, the valuations of the strong rally on which the market stands at this point of time, whether it is US. Niraj, did I lose you?
No, I can hear you loud and clear, Niraj. I can hear you loud and clear. Yeah.
So the current valuations on which US and India particularly, the two markets stand, and a very strong rally in the last 1 year, markets will find its own reason to worry a little bit and force a little bit of correction, right? So that is one point. Second is, it is indeed a tightrope walk. All of us like fairy tales, all of us want Goldilocks, not too hot, not too cold, but reality is often not that Goldilocks, right? So markets have been wanting a rate cut and a sharp rate cut, but they don't want economic slowdown accompanying it. You have to be careful what you wish for. So it looks like markets may get their wish this time, which is a very sharp rate cut cycle, but it might come with some negative economic data, which might not be very good for the markets overall.
Okay, so what wins? I mean, you reckon because valuations have been a concern now for the last 12, 18 maybe months, or everybody who's been sitting on cash are licking their wounds as well. What do you think triumphs? Do you think valuation concerns and slower growth triumphs? Or do you think fund flows and a rate cut triumphs in terms of sentiment and therefore markets staying steady or even moving higher?
So interestingly, Niraj, sharp rate cuts are usually not good for equities in the near term. Gradual rate cuts have a mixed track record of whether they are good for equities or bad for equities. Actually, if you analyze the data over 40, 50 years, it's almost 50-50. It's the probability is no better than a coin toss. A sharper rate cuts which create expectations of many more sharp rate cuts in the near future. Logically, I mean, if you think about it, we step back. Logically, would make bonds a lot more attractive than equities. Because let's say, theoretically speaking, market starts to believe that USA might cut rates by 200 or 250 basis points within a span of 1 year. Your 30-year treasury is it's almost like a sitting duck in terms of where you should park your money, right? I mean, why bother with equities risk? So this is one of the reasons why money tends to flow out of equities and chases bonds in the near term. Second is obviously, as you mentioned, that sharp rate cuts also sort of communicates to the market that is the economy weaker than what we are reading in the data trends. Does Fed know something which we don't know? Is Fed panicking a little bit? Those concerns also surface. But the first one itself is powerful enough. I mean, it's fairly logical.
Fair call. Just one small question on that before we move to India, and which is that the belief almost is that, and you're right, I mean, I was reading, I believe a Citi note which said that their data analysis also, like yours, seems to suggest the first 1 or 3 months, it's negative and then it turns positive. But usually also a rate cut cycle or a rate easing cycle gets accompanied by changes in fund flows towards emerging markets as well. You reckon that could happen because India's weight in MSCI EM is now significantly higher. We might even eclipse China at some point of time. So what happens to that part of the equation?
Honestly, I don't know. is the right answer on this one. We have been waiting for incremental FPI flows in the country as our weight in India, weight in MSCI has been going up. Indian economy has been doing better relative to certainly the entire EM world. And there's all the logic that FI should be increasing their weight in the country. But contrary to that, FI weight has actually come down in the last 7-8 years from 21-22% to current 18-18.5%. So that's a little bit of a mystery, I think, to some extent. So it's very difficult to predict that actually if the FI flows will actually turn because of the rate cut cycle. Let's see.
Okay, fair call. The template the last couple of days seems, or last maybe a week, Dheeraj, seems to have been that don't bet on defense, but bet on defensives. You're starting to see the emergence of staples, maybe some of the underperforming private sector banks sporadically showing a bit of an uptick as well. And the defense railways theme has taken a bit of a backseat. You reckon the template continues for the latter half of the year?
Yeah, so I think you hit the nail on the head when you said underperforming banks. So in general, in the last 2 or 3 months, we have seen re-emergence of the underperforming sectors, right? So it started with IT, which was the first sector to show a very, very strong bounce. It started perhaps in May and June itself. And then we saw follow through in FMCG, completely ignored sector for a while. And now we are beginning to see in private banks a little bit. I mean, that's still sort of struggling. It's still just a 2-day, 3-day phenomenon. Let's see if it stretches. But yes, that's what has been happening. Money has been moving out a little bit from the strong performing sectors into weaker performing sectors. I call it winds of change. So there is certainly a cycle rotation underway in favor of sectors which have underperformed in the last 2 or 3 years. And with some amount of logical reason and catalyst. So there is a slightly higher government support to consumption in this budget. Many state governments are providing various kinds of subsidies or incentives to boost consumption and the bottom of the pyramid economy. We have seen a little bit of an uptick in consumer data and consumption data even in the last GDP print, also in the commentaries of most FMCG companies. So that's doing well on that end. On the IT services, very interesting observation I made recently was that the sector's ex-Mag 7 earnings growth in the last quarter actually beat the analyst estimates by almost 70-80%. And that's usually good news for IT services. I mean, that results in order flows beginning to pick up for Indian IT services with 1 or 2 quarters lag. So there are some green shoots in IT services as well. Private banks is purely a relative valuation game at this point of time. I mean, there's nothing wrong. Earnings have been coming in. There are no issues in NPLs. Valuations have gotten derated. Many participants in the market now find attractive value out there. So to answer your question, yes, the winds of change, I think, should last for some more time. Few quarters for sure, few years, I don't know at this point of time, maybe.
Okay, fair call. Let me try. I'll probe about the ones favored in a moment, but I have a bit of a cross question on a couple of themes, Dheeraj, which have been performing. And viewers, here, look at this chart. I mean, this is a chart of maybe given about 8 days or 9 days ago. But here's a chart which shows, let's say, real estate, a sector which has done really well. And fundamentally, pre-sales numbers have looked okay. Inventory is seen at the lowest level since 2008 in India. And I presume this must be tier 1 cities and not necessarily India-wide. But be that as it may, this looks very solid from an inventory data perspective. But Dheeraj, it's a sector which has now started to plateau out a little bit. So I'm trying to focus on themes which have done really well. A lot of people might already have investments there. And therefore, I would love to know, how do you think about some of these? So let's start with real estate, because it's a wide economic impact sector too. What do you do with the pure play real estate players now that there has been a rally for the last 24 to 36 months?
So Niraj, the answer is purely in time horizon, right? So as you rightly pointed out, real estate sector is doing well. One of the biggest variables which gives me confidence that this cycle for real estate will last longer than let's say either 94 to 97 cycle 92 to 94 cycle or 2003 to 7 cycle, because the price rises have been more moderate and gradual as compared to, let's say, 2003 to 7 cycle. So in 3 to 7, home prices, let's say in cities like Bombay, went up 10x in a span of 4 years, which obviously killed demand at the end of 4 or 5 years. I mean, it went into speculative demand and finally killed demand. This cycle, the price increases are more like 10, 12, 14% per annum, which is more digestible. So it can last. However, in the near term, from a stock price performance point of view, the plateauing effect might be visible for some more time, because market has just started focusing back on valuations a lot more than what the market was focusing on, let's say, even 4 months or 5 months ago, and trying to seek pockets of safety. So it's not reflected in the index, because one sector sort of struggles or corrects, but another sector comes back into momentum. So like IT and FMCG is holding up the index at this point of time. But there is a slight amount of risk-off effect in the market. Investors are focusing more on numbers than on narratives. The focus on valuations have come back. The focus on relative safety has come back. The animal spirits has gone out a little bit. So it could consolidate for a while more.
Got it. Some recent developments, and we'll talk about GST in a moment, but one big development that happened, Dheeraj, is the passage of the Biosecure Act. It just got done this morning, as per Bloomberg. Now, there's a lot of talk about impact that something like this could have for pharmaceutical companies, non-China pharmaceutical companies across the world, because the Biosecure Act seems to target some specific Chinese companies. Now, I would love to know if you've given this some thought. Sorry, this come out in the open in the morning, so I'm throwing this out of the dark at you. But any thoughts on what some moves like these could do? Are these really big moves? And is Indian pharma well poised to benefit from this or other trends?
I think it is. So pharma has been in a very strong uptrend now for a few years. And this is one sector where, despite the strong uptrend, barring a couple of pockets here and there, valuations are not completely out of whack, right? So valuations are still supportive. So the whole pharma uptrend started with generics becoming a little bit more in tight supply in the US. And the price erosion for generics, which was 20%, 25% per annum, came down to mid-single digits. Globally, many of the generic players, because of almost a decade of very deep price erosion, actually shut down. So there was a meaningful consolidation in the sector. Indian generic players became much better positioned from a competitive advantage point of view. And now the Biosecure Act, which is the whole genesis of the act is that US is feeling pinch of high drug prices and a little bit of shortage in some of the pockets as well. So this gives the further fillip or boost to CDMO, contract manufacturing, Indian pharma players. And by itself, does this change the industry fundamentals around? I don't think so. But industry which was already doing well, there was already a very, very strong reason to say that US generic market is now stabilized, price erosions are not there, and Indian companies will benefit. This is an added, I would say, lever for the Indian companies to do well. So this is one sector which I think is in a secular trend for many more years to come as well.
By the way, viewers, watch out for the stocks today. I mean, Syngene is up about 1%, Lotus Labs, I think, up about 4%, Newland Labs could also be in the green today. Divi's is up about 3%. So some of these stocks are seeing that impact in the session today. Now, stay on Dheeraj, because I want to get in my colleague, Mahima, to talk about the other aspect, because some of the cancer importing companies or cancer drug importing companies are also doing well because of the GST move that has happened. It's the current news, and Mahima joins in to put that into perspective. Mahima, good morning.
Good morning, Niraj. So basically, the rate on cancer drugs has been considered to be reduced from 12% to 5%. Now, this could potentially benefit and you're also seeing stock movement in these companies today. This includes Abbott India, Zydus Life Sciences, Alchem Laboratories, Cipla, Biocon, and AstraZeneca Pharma. Now, it's not just the pharma companies; there are also snacking companies which have benefited from the recent GST changes, where rate for excluded and expanded savory snacks has been reduced from 18% to that 12% mark. So all snacking company stocks are up and above in trade today. This includes Pratap Snacks, Bikaji Foods, Gopal Snacks. There is also GST on car seats that has been increased from 18% to 28%. Now, one player that has been impacted because of this is Bharat Seats. There's also an introduction of reverse charge mechanism on metal scrap. Now, this basically means that if an unregistered dealer is selling metal scrap to a registered dealer, the registered dealer will be liable for paying the GST taxes. Now, this is impacting stocks like metal scrap recyclers who buy these metal scrap. This includes Gravita India and Pondy Oxides and Chemicals, and also steel companies which are not really moving in trade today on the back of this news, but there is Tata Steel and JSW Steel which could possibly have some impact. So these are some of the stocks which have seen impact on the back of the GST changes that took place yesterday.
Thanks, Mahima. Dheeraj, any thoughts here? I mean, again, too early, just happened overnight, and if not just on the current moves, but broadly on the fact that there is some recognition around what could be happening at the rural end, so some snacks, savories, etc., also seeing some GST cuts there. Do you think the alignment of decision making is happening with trying to boost sentiment and fortunes at the rural end currently?
I think Mahima did a fantastic analysis of all the impacts on the GST cuts. So not much for me to add. But yeah, I think in general, there is a slight shift in the government policies towards focus on consumption as well. So overall, in general, there is a slight more awareness of the fact that the bottom of the pyramid has not been doing as well as the middle and the upper end of the pyramid. We saw that little bit of shift in the budget also, where more allocation was done to all the rural schemes and consumption boost. Government consumption expenditure itself as compared to the interim budget was hiked by almost 250 basis points. So yeah, I mean, overall there is a shift, but nothing, no more micro addition. I think Mahima did a fantastic job of capturing everything, much beyond perhaps even what I knew.
What I was trying to understand is, so we've gotten the GST impact, but I'm just trying to think whether the GST changes plus all the other things make you believe that rural consumption-led players could now be a forefront, because they also, I mean, they are never cheap, but relative to what they've done in the past and the last 18 months, not going anywhere, do they present that relative value currently? Let's say staples, for example.
I think so, yes. And see, I mean, as you rightly said, they're never cheap. But if there is ample liquidity in the market, the liquidity will always try to seek areas where the marginal rate of change is moving up and move out a little bit where marginal rate of change is moving down. So in many of the capital expenditure areas, the marginal rate of change is either stagnating or moving down slightly. The absolute rate of change is still healthy. And in the consumption area, the marginal rate of change is moving up. So yes, we will see that shift continue for some time more.
Got it. Dheeraj, what about non-lending financials? Sorry, I'm moving subjects now because we spoke about banks, but I want to bring in the non-lending financials into the picture simply because after a really long time, life insurance is making its presence felt on the daily screen. And we already seen that despite regulatory moves, the buying interest in, let's say, for example, the wealth or the asset managers is not dwindling. Those stocks are making new highs every second, third week as well. So what about non-lending financials? Do you like that bucket? And if so, what do you like and why?
Yeah, I like that bucket. So, I mean, most of them are long-term structural plays on India, right? On financialization of savings, on increased allocation to equities, increased requirement and desire for protection, which is insurance. So whether they're capital market players, insurance, those are clearly in the business cycle itself is in a 10-20 year uptrend. So even now, on an annual basis, just 4.5% of household savings go into mutual funds. This number can easily rise to 12, 14, 15% before it starts to struggle. So it's a long journey. We all know Indians are underinsured on the protection side. Historically, we considered insurance as yet another savings instrument. It's only in the last few years that we have begun to realize that better to consider fixed deposits or mutual funds as savings instruments and insurance as protection. So these are long-term trends and pretty much here to stay.
Got it. Speaking of long-term trends, there is another chart, of course, which we will bring. But Dheeraj, just wanted your view on the new age tech companies. Now, you're constructive on IT services, which I heard you say that, or maybe if not constructive, you at least see green shoots there. I would love to know, what do you think about the tech-enabled consumer companies, or maybe they are tech companies with a consumption angle to them, but they've done really well. And the newer features are getting added, which are making their presence felt. Blinkit in Zomato's case, or some other cases. Do you like this whole bucket? Even Paytm is starting to move up. So I'm not asking you to speak about specific stocks. I'm just trying to understand, how do you think about the tech-enabled businesses?
So, tech-enabled businesses, by definition, if you get the business model right, and the TAM is large enough, your incremental revenues come at extremely high margins, right? Because the infrastructure is the same, and once infrastructure is built, the incremental revenues keep on boosting your margins. So if you're in that space where the TAM is large and you can keep on capturing large market share, you mentioned Zomato and Blinkit, for example. So without commenting on the stock valuation at this point of time, this is a market which will continue to grow for the next 20 years. It's a duopoly at this point of time. And as more people order, as AOVs keep going up, the margins will keep expanding. Whereas there could be many other, let's say, consumer companies, for the want of a better word, which use digital primarily for distribution. There, the whole metrics on TAM may not be very clear. So this whole digitally enabled services or digitally enabled businesses, each company is so different, and each company's the target market is so different that it's very difficult to brush them all with the same brush. And also the competitive intensity, right? Food delivery and groceries now are duopoly, or at best a 3-player market. So the competitive intensity, which was very high, let's say 6-7 years ago, 5-7 years ago, has come down. So that also will determine how profitable you can become. If the competitive intensity or barriers to entry is very high, then it's tougher.
Got it. Where are you most worried, Dheeraj? Aside of the fact that you are worried on valuations, because you brought up as the primary point when I asked you the first question, where is it that you are most worried about?
Apart from valuations, I think the one little shock that we saw in August, and that almost immediately vanished at that point of time, but we should not write it off completely, is the dual impact on the entire global financial system of US cutting rates and Japan increasing rates. So for last 5, 6, 7 years, it was very easy for the Japanese money to flow offshore as the yen was in a structural depreciation mode. So as per one data I read on Bloomberg, I think the Japanese offshore investments over 19 to 24 expanded by almost 3 trillion yen or thereabouts, which is about 1.4, 1.5 trillion US dollars. That's a huge sum of money. So as the US rates come down and Japanese rates go up, could there be a large-scale unwinding? I don't know, but the risk is high. How does it impact the global financial market stability, whether it is fixed income or equities? Again, very difficult to predict at this point of time. It's one of those things which you can't analyze and put a number to it. But I think it's a large risk, which since I mean, I saw a trailer of that on August 5, which was the day of the worst crash since the Black Monday of 1987 for global markets. Nikkei was down 12% in one single day. But immediately it stabilized. Doesn't mean it can't revisit at some point of time. So I worry a little bit about that.
Point well noted. Okay. Niraj, we covered a wide gamut of topics. Didn't quite flow one after the other, but it was just good to get your brains on a lot of these. So thank you so much for sharing the thoughts, and thanks for your time today.
Thank you very much for the interaction. I enjoyed it too. Thank you.
Yep, thank you. Well, that's the ambit view on a bunch of things. Keep in mind that the markets are flat completely, with Nifty IT being the only one which is really shining, now about 0.75% higher, with the likes of Coforge, which has got a big thumbs up from brokerages leading the charge, I presume, but a clutch of other names also doing rather well for themselves. With that, it's a wrap on this leg of Talking Point. Thanks so much for tuning in.
Markets trade flat. Bank Nifty trades marginally lower, while the Nifty resists the level of 24,900. Sectorial indices trade mixed. Pharma, media and IT lead gains, while financials and autos drag. And India snack maker spikes over 5% after the finance ministry slashed the GST on namkeen and savoury items. Meanwhile, Vodafone Idea gains over 3% after Citi rated the stock with a buy rating, with a revised target price indicating a 69% upside. Brokerages say of peak